Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special conversation. We are focusing on M&M's Q3 numbers. A solid set of numbers have actually come through. We've seen a 47% surge in the net profit for Q3 for M&M, 4,675 crore rupees. It's definitely riding on the best ever quarterly revenues that have come in above 50,000 crore rupees and has crossed that mark for the first time as well in quarterly revenues, up by 26%, although the estimates were slightly higher as well here. There's also been an impact of the new labor codes, which we will discuss. And of course, M&M continues to be ranked number one in revenue market share in SUVs with 24.1%. LCVs also, we have also seen a market share of 51.9% there. And it's also topped the tractor segment as well with the 44% market share as well. So let's get talking with the top management of M&M, welcoming Mr. Rajesh Jejurikar, the ED and CEO of Auto and Farm sector at M&M. Welcome to you, sir. Good to have you with us as always. Again, a solid set of performance coming in from you in Q3. Are you happy with the numbers?
Sakshi, thanks for having me on the show again, and always good to be with you on this show. Yes, we are happy with the numbers, and like you played them out, so it saves me the breath of repeating it. But very strong revenue, our highest ever revenue, a very strong PAT performance, and of course, like you said, every segmental performance, which is market shares and overall auto and farm margins all have been very healthy. So yes, it's what I never got as a student, but it seems to be a close to perfect report card.
What next can we ask for exactly? But I want to understand from you what really were the key growth drivers that pulled such a record figure for the revenue for you? Is it all cylinders firing on all segments for you? Are there some that are actually driving the show more? How are you looking at the outlook at this point in time, sir?
Yeah, so let's just walk quickly through segments. SUV did very well. We had a 26% growth, so that was a big driver of performance. Tractors and commercial vehicles. So LCV 3.5 ton, if you'll recall, we've been talking about it over the last few
Yes.
quarters.
Yes.
That's the segment we were waiting for growth to start, and it's been like several quarters of flattish to negative growth, and all the indicators were showing that it should start now.
Yeah.
And this quarter we saw that. So we saw 20% plus growth in the segment. In the segment,
Mm.
we gained some market share. We have very strong market share here in LCV 3.5 tons at 51.9%.
Mm.
We have very strong portfolio pickup portfolio there.
Absolutely.
Tractors, again, we saw very healthy segmental growth. So GST was definitely a
Yeah.
driver of some of this, especially commercial segments. And to your question on outlook, one of the things we have to keep in mind is when we look at commercial segment, which is LCVs or heavy, like medium and heavy commercial, or even tractors. These are sources of profit for the customer, and I
Mm.
mean, there's sources of income, and pricing does make a difference, as does total cost of ownership.
Mm.
The reduction in price is quite substantial at 10%. Now, that alone leads to a 4 to 5% increase in profit of a commercial vehicle pickup operator. Plus,
Mm.
interest costs as they come down, that helps the process. So, overall, we would expect LCV demand to kind of stay. Tractor demand, there have been a lot of speculation on how long it will stay. I think we have to be see it in a relative context, and the relative context is that this year is likely to end up at 25%. So there will be a base effect,
Mm.
and if we expect to see 25% year on year in a segment like that on an ongoing basis, that's not likely to happen. And we'll talk more specifically in May about our outlook for the
Yeah.
year.
Yes.
But we have to keep in mind as we look at next year that this year is going to be on a very high base of 24%. So
Mm.
overall, we remain optimistic. Our SUV demand is very strong, and again, we'll put out the numbers in May by way of outlook for next year. But we remain very positive, especially with two successful launches we've just had in January. Both the
Mm.
7XO and the 9S have got a very,
Yes.
very good response in the market.
Okay. We'll talk about the launches and the launch pipeline in a bit, but I wanted to focus on the margins front as well. There's been a strong EBIT margins on auto space, just about a slight miss on the farm space. If you could highlight for us what are the things that are ongoing and how do you see the margin expansion going forward? And overall, the PBT margins, how are you looking at them?
The operating margin on tractors, which is what we call core tractors, or the farm business without international subsidies, has actually been very healthy
Hmm.
and has grown, I think, by 2.5 percentage points or something like that, 2.54 or 5. So actually, tractor margins have been extremely strong, which is the core of the
Okay.
business. We
Hmm.
haven't seen a very strong growth in PAT, which at 7% commensurate with the revenues, because we've taken impairments
Hmm.
at a PAT level about 550 crores, and two of our international subsidiaries, our Kun Foundry in Turkey and our farm business in Japan. So two of our companies have taken impairments, leading which was worth equivalent to about 550 crores.
Okay.
So that is why you see a PAT growth of 7% against a significantly higher revenue growth. But if you look at the operating margin of the core business, which is the tractors business, it's actually seen a very strong margin growth.
Hmm.
And the margin there, PBIT percentage margin there is about 20.5%. And if you look at only core tractors, it's over 21%.
Hmm. Absolutely. So, also wanted to get a sense when it comes to the kind of demand that you are seeing on the back of the trade talks that are happening. How are you looking at that? The U.S. trade deal talk is now been finalized. The interim deal, at least. The EU deal has also been finalized. How are you looking at all of that? There was also some anticipation that from the EU there will be a lot more higher end priced vehicles that will be coming in at much lower tariffs now. How would you be looking at all of these scenarios? And is there an overall impact on the sector? And for you, what are the opportunities, if you could highlight, sir?
Yeah, first let's try. I'll focus only on the EU trade deal because
Okay.
the US doesn't seem to have any significant play related to auto,
Okay.
and there's some opening up of the sector for much bigger and more expensive cars. So we're not in that space. So
Hmm.
I'm not really covering that at the moment. Let me talk a little about the EU trade FTA.
Hmm.
So we think it's firstly it's an opportunity, and it will enable us to think, especially in categories like electric, where we have cutting edge products, and even others,
Yes. Hmm.
to get into the EU market, with quotas that are very favorable for the size of opportunity that is there. We don't think that this will significantly affect we actually strongly believe it will not affect us here for the following reason. The quota start at 15,000 euro price point. On
Hmm.
15,000 euro, there is a customs duty of,
Correct.
let's say, 30% plus.
Hmm.
And most of the vehicles in Europe are more than 4 meters, so they would pay a GST of 40%.
Hmm.
So when you look at all of that, a starting point of 15,000 euro and including the costs incurred in India will lead to a price point of 35 lakhs. Now, 15,000 euro the products we have in India are way stronger than the 15,000 euro product that we're talking about. So, our top end of our products are 22 odd lakh ex showroom.
Hmm.
And we have very good options even in this 15 to 18 lakh price point. So we actually don't see this affecting us, and it actually is an opportunity because it gives us an opportunity to get our products out there once we
Hmm.
have a stronger left and right portfolio over the next couple of years.
Okay. And for the US, you said that not too much of an impact, but tractors exports, is that an area that you're looking at?
So we already have a strong tractor presence,
Hmm.
and of course,
Hmm.
50% tariff was a concern. At 18%, India is kind of equal to the other countries which are exporting into US. So that disadvantage that we had for the last few months will get overcome. So yes, it's good. It's good to have this correction done for our tractor business.
Hmm, okay. So let me also ask you on the EV space particularly. We've been talking about some last few quarters on the heightened competitive intensity. How are you looking at that panning out? Also, the supply chain issues that had been emerging through the China rare earth minerals issues, all of those things. How are they smoothing out when it comes to the EV space? And what's the outlook?
Yeah, we've always said, Sakshi, that competitive intensity in a new category is actually good for the category because
Mm,
it's only when you have more players in that, the process of adoption actually accelerates as more players come. And we've seen some of that over the last few months.
mm,
Customers start getting confidence. There's stronger word of mouth about the category. The ecosystem of suppliers, charging points, all of that starts developing. So actually, when you're developing a category, it's good to have competition. So we welcome competition. It helps us raise our game as well. So we don't worry about the competition. We will focus on what our customers want and how do we give them a really wow product, which is what we've been doing. So the two products that we launched last year, the
wow.
XCV90 and the B6, both have got very good feedback. We've sold more than 41,000 vehicles over a 10-month period. Now,
Mm,
at that price point, which is, price point, average price point of 25 to 28 lakhs for these two products, to do 4,000 a month in a new category, we think is really commendable.
mm,
We now have launched the XCV9S, which is getting a very good feedback. So we're looking at the run rate of 4,000 a month to go in next
okay.
year to around 7,000 a month.
Mm,
So, we will see growth coming. To the specific point on supply chain, rare earth was not a risk only to EV, it's a risk to
mm.
ICE and EV. We had put in place multiple mitigation plans and we've de-risked that and we seem to be good for now.
Okay, seem to be good for now. Let me also ask you now on the launch pipeline. Of course, you did talk about the 9S as well as both 7XO, how they've picked up in huge demand. What's the waiting period like for 7XO right now? And of course, what's the launch pipeline that we can expect?
I wish I don't have to talk about waiting period. It's a good waiting period may excite other stakeholders, but it does put off our customers. So long
Yeah.
waiting period. So, well, on 7XO, we got very strong demand for the top end AX7L,
Mm,
much higher than what we had expected. So, that
mm,
has got into a little longer waiting period of a few months. I'm avoiding
mm,
giving you a specific number, but yes, there's a longish waiting period. We're
mm,
working to ramp up capacity of that particular variant.
mm.
But yes, there is a longish waiting period right now on that.
Okay, and what about your capacity, sir? You have been indicating that you are going to be really looking at that aspect to increase that towards the demand going forward, both between auto and farm. How are you looking at the split and what's the outlook?
Yeah, so clearly, it's good when an organization has to work more on capacities. We've increased capacities quite dramatically in the last 4 years. We were doing about 18,000 per month of SUVs.
Mm,
Today, we have a capacity of 55,000 in just the ICE plus, 7,000 in EVs, 57,000 plus 7,000. So
mm,
65,000 has is the capacity that we're using and close to selling at compared to 18 odd thousand that was there 5 years 4 5 years back. So this is a significant increase in capacity that we've done. We are planning to increase. I'm just talking about the SUV part first. We are planning to increase about 4 odd thousand of current products during the course of this year, plus the 7S will add about 3,000. So 6 to 7,000 a month
mm,
is the capacity increase that we would do on the SUVs. As we move into 2027, we will bring in a couple of new products coming out of the new IQ platform. They'll come out of Chakan, so that will add capacity. And then we've
okay.
just announced a new greenfield in, Nagpur. And
Mm,
interestingly, Nagpur is a very appropriate, apt location because it represents India. It's right in the center. So,
mm,
it's we believe a great location connected very well with Samriddhi, and that's where we will over a
mm,
period of time add about 500,000 UV SUV capacity and
mm.
100,000 of tractors.
Fantastic. Sir, also wanted to ask you on the price points as well. There've been a lot of talk about whether the companies are looking at price hikes now. There has been a talk about how GST, yeah, the cut that was passed on, will that get offset in case the prices are hiked there across the industry? Some of the companies have already announced it. What's your plan, sir?
We also announced a 1%
Yeah.
increase in the SUVs. That was basically we had no choice because of the commodity increases
Mm,
being quite significant.
Hmm.
especially in precious metals, and the impact of foreign exchange, both in the dollar rupee rate.
Hmm.
So we had to factor in a 1% increase, which we've announced.
Hmm.
It does not offset the benefit of the GST, because the GST reduction was roughly 8% in UVs and about 10 odd percent in the bigger UVs, and about 10 odd percent in the smaller UVs. So it's still a very small percentage of the benefit, and this was necessitated by the very strong increases that we've seen in commodity and the impact of the dollar rate.
Okay. So on the outlook now, on the top line, the bottom line, as well as the margins are concerned, do you see this momentum sustaining through in Q4 of FY26 and in FY27 also? How do you see things panning out on all these three parameters?
Q4 is expected to be strong, without giving specific numbers on the demand front. Both the SUV demand, the LCV demand, and the tractor demand are all going to be strong. For F27, we'll put out some stronger inputs, or clearer inputs, maybe the right word, in May.
In May. And the margins are 19.7%, I think, is your record. How soon are you reaching there and crossing that?
No guidance on margins.
Or, okay, thank you so much, sir, for being with us on the show and, of course, highlighting all these insights for all our viewers as well. Always a pleasure to host you with us on Business Today Television and looking forward to meeting you soon.
Thanks, Sakshi, and look forward to.
Thank you so much, sir. All the very
Bye.
best for the upcoming
Bye.
quarters. Thank you. Bye, sir.